Welcome to Short View Trading. It's Monday, 15th of May, around 9:30 a.m. London time. We want to dig into what matters for markets, for equity markets, on the next 1 to 2 week basis. If you're a swing trader of equity index futures, particularly S&P 500 futures, but others as well, what are the factors you need to think about? What should you be focused on? What matters over the next week or two in equity markets? Well, these markets are fascinating, and increasingly they're starting to behave like they behaved in early February. Now, what do I mean by that? Well, what I mean by that is certain key liquidity indicators. Remember, liquidity is critical for equity markets. Certain key liquidity indicators are starting to break down. Look at gold. Gold's really struggling, as you can see in this chart, at the sort of 2070 odd level. It's been a major resistance level several times, or a couple of key times over recent years. And once again, over the last few trading sessions, gold is struggling to get above that level and breaking down from that level. It's not just gold. Look at silver. Silver's had a tough 10 days, breaking down quite sharply from the levels it was at 10 days, 15 days ago. And of course, Bitcoin as well. Bitcoin topped in the middle of April, as you can see in the chart in front of you now, and has actually come off quite meaningfully since that time. It's been pretty weak. All of those are key liquidity indicators. And when they break down, it's typically telling you that liquidity's tightening up. And the flip side of that, of course, is what we see with the dollar. The dollar, the DXY, the trade weight of the dollar futures look like they've been base building for quite a few weeks. And indeed, we're actually quite strong on Friday, breaking above the 50-day moving average, at least initially, as you can see in the chart. But as we saw on Thursday, the Bank of England, the flip side of the dollar, the pound, the Bank of England raised rates 25 basis points on Thursday, but the currency sold off. The GB pound was weaker. The euro has been weaker over recent trading sessions, despite a more hawkish ECB. And of course, markets eventually price in and look forward and price in all that extra hawkishness and start wondering about other factors. And that's arguably what we're seeing with the dollar, the DXY finding a floor and looking like it wants to break upwards. Now, that's also telling you about tighter liquidity. Stronger dollar correlates with the equity market going down generally. As you can see in this chart in front of you now, the DXY and the S&P 500 quite tightly correlated. Now, as I mentioned, all of that was actually quite similar to what we saw in early February. That price action of gold, Bitcoin, silver and the dollar was very similar to early Feb. And of course, in early February, we saw equity markets starting to break down and sell off into mid-March, where they made that local low on the back of the banking crisis at that time. But as well as those liquidity indicators breaking down, those signs of tightening liquidity, we've also had a divergence in our key risk appetite models. And this also happened last in early February. RAG1 and RAG2 are two key risk appetite gauges that measure risk appetite across the global financial landscape each and every day, are breaking down. And as I said, as you can see in the chart in front of you, this happened earlier, last time, in the beginning of February, just before that breakdown in equity markets. And what it's really telling you is that certain markets are rolling over, hence the weakness that we've had in RAG1, moving all the way back towards its buy threshold, whilst other markets, which RAG2 are picking up, have remained pretty robust and resolute. In fact, you see that in the price action in general. Broad brush, tech, very strong still. Cyclical parts of the US equity market, for example, weak. So that's the price action that's coming through in these risk appetite models, and exactly what we saw in early February. So it leaves us with the question, are markets breaking down similar to what we saw in early February? Or indeed, actually, is tech going to take them higher? And we're going to find another move and a break up out of this trading range of the past 6 weeks. And to see how we're playing this each and every day, please do take a subscription to the Daily Rag or take a free trial. Simply click on the link below, add in your name and email address, no credit card details required. We'll send you a free trial of the Daily Rag for a bunch of trading sessions, or if you're a subscriber, you should have had it in your inbox earlier this morning. But every day we update our views on the market on a 1 to 2 week basis. We update the models and we outline our thinking in that publication. So what are we watching this week? Well, there's a bunch of key themes. In particular, there's a big focus on US housing data, NAHB housing market index, starts and permits, existing home sales, all coming out. So a good take on where we're at in terms of US housing. Over and above that, there's quite a few key US data points, including Philly Fed and leading economic indicators on Thursday. The LEIs, the leading economic indicators, are of course critical in terms of the outlook for the US economy. They've been very weak in recent last year or so. And then of course we've got US retail sales on Tuesday And then third key theme throughout the week linked to that, we've got retail earnings from major retailers, Walmart, Home Depot, amongst others, over the course of this week. Then on top of that, it's a big China data week on Tuesday, a big data dump, macro data out of China. And then finally, we've got a lot of central bank governors speaking over the course of this week, including Jerome Powell. Also, interestingly, including Vice President Barr at the Fed, who talks about supervision. He'll be giving testimony on the Hill. Given what's happened in the mid-sized banks, that's going to be very interesting. He's up twice on the Hill over the course of this week. And then a number of other Fed governors and ECB's Lagarde as well over the course of the week. So that's it from us. That's your morning market hit for Monday, 15th of May. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and do like and share on social media. That would be much appreciated. Or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.